So in this Zoom session, we're going to build upon what we already know about the order flow and how to identify trades once we have established the order flow. So if we followed my teachings based on the order flow and we apply it to the 4-hour chart and the daily chart, this, what I will teach you in this Zoom um, session, will build upon how to identify a good trade for the week and get in on the action for the pair that you are monitoring. So we are going to start off with EU, Euro USD. So all I'm going to do first on my EU chart here is add these lines. Now these lines, obviously, they represent days of the week here. So this would be Friday, and just like we have Friday, we have a Thursday. And just like we have Thursday, we have a Wednesday. And we have 2 more days, which is the Tuesday and the Monday. Okay, so you ask yourself, well, why is the days of the week important? Well, the days of the week are important. They are extremely important based on the fact that we trade Monday to Friday. The market is only open to us Monday to Friday. So we have 5 days of the week where we can trade from the market open to the market close. Now I'm going to show you how to narrow down what you need to look for in order to enter a decent trade. So based on what I said about the order flow on the 4-hour and the daily chart, you can, with a high level of certainty, predict where the market is going to go. So if we look here on a Monday, so this is the market open on a Monday over here. Now, when the market opens, all we need to do is for 5 days, we draw a line over here, okay? And this line will represent the weekly open, the weekly opening candle for the week. Now, during the week, because we trade price action, there will be a HOWT, which stands for high of the week. And then we will get the opposite, which would be LOTW, which is low of the week. So when price gets to a point where it either makes one of the two first, so meaning if price makes a high of the week or a low of the week first, well, then it will be in accordance with the order flow based on the 4-hour or the daily chart. So if we look at EU as an example over here, from Monday's open over here, price came up, traveled, and made the high of the day. So this is another abbreviation we use, which is HOTD, standing for high of the day. So when we have a high of the day formed, obviously that is a point of liquidity for another time. Okay, so when a high of the day is formed, well, then that is done also at the London session. Now, my London session could be different to your London session because our time zones are different depending on where we live in the world. You need to go and look what time the London kill zone is for your time zone. So my time zone is 10 a.m. and that is my London open. So this London open for Monday is important to us because this will set the mood or the trend for the week of where price will start to react, being a Monday, and we will see reaction around kill zones each day. So the high of the day on Monday was set around, as we see with this vertical line represented as our kill zone over here. This is our high of the day. And this horizontal red line indicates the opening candle or the opening price of the week. Now, on Monday, price briefly came up for the London session kill zone and then basically plummeted back down over here. Okay, and this is in reverse. So here we have a low of the day. Low of the day. Okay, so obviously the same can be said that when we have a low of the day, that is a point of liquidity. So yesterday's high is now targeted over here, and we can see that this high of the day was now taken. So this point of liquidity has been taken over here on Tuesday, because this is Tuesday. Okay, so when Tuesday comes, it takes the liquidity of the high of the day and runs it down. Okay, so this is the run on liquidity over here. So this run on liquidity is about 92 pips. Okay, so this yesterday was the low of the day for Tuesday, sitting over here. And as we can see, that low of the day gets raided over there, because obviously the low of the day and the high of the day are daily candles. So you can imagine how many orders sit inside of a daily candle. Okay, so these are daily candle highs and daily candle lows. So there is buy stops, sell stops, sell stop losses, buy stop losses above and below these candle highs and candle lows. So there is liquidity there, they get raided, and then price runs the opposite direction. Okay, so on EU for Tuesday, we have the the low of the week formed over here on Wednesday, when price raids the liquidity of Tuesday's lows. It raids that liquidity and forms the low of the week. Okay, now I'm going to add in a second vertical line over here representing the kill zone for the New York Open. So my time zone to me indicates at 3 o'clock the New York Open starts. Now, what I said earlier, that from Monday kill zone to Wednesday New York Open, generally with a 90% accuracy, we can determine that somewhere in this 3 days, the high of the week or the low of the week will be set. Okay, and when that is set, price will then continue its trend. So it will gather liquidity in the form of consolidation, accumulation, compression, a ranging market, raiding highs, raiding lows, and then continue its trend. Now, sometimes there will be exceptions to this rule, but generally speaking, the entry points you want to look for are between the Monday kill zone, which is 10 a.m. for me. It will be different for you. You need to go and check. And Wednesday kill zone for the New York Open. This is where either the high of the week or the low of the week will be set. So this opening horizontal red line indicates the opening weekly price. The red line indicates the London opening for Monday, and this red vertical line indicates the New York Open for Wednesday. And we are looking inside of this narrow 3-day range for the high of the week or the low of the week to be set. Now, there is exceptions to the rule, as I said, but generally speaking, on any pair you trade, this will occur between these 3 days with at least 90% of the time. Very rarely you will have a reason or a particular time where price goes outside of these 3 days to set the high of the week or the low of the week. Now, obviously, you need to understand the order flow on the daily chart, 4-hour chart, to be able to determine, is it going to be the high of the week? Is it going to be the low of the week that I'm looking to trade to catch the general trend? Now, you can either be in any of these trades. You could have sold when the highs were raided on Monday and taken price down, which is not a bad trade. The same can be said that if you took a trade on Wednesday and caught this move up, that is also a good trade. There is no bad trades if you have confirmation to take the trade, multiple confirmations to take the trade, then there is no reason to call it a bad trade. As long as it is a profitable trade, then it is a good trade. So this, what I'm showing you here, will narrow down where you need to look for trades. So instead of taking trades on the Asian kill zone, as some people like to do, you don't need to do that because you have not missed the price action for the week. And the same can be said on Thursday or Friday. You can still trade on a Thursday. I generally don't trade on a Friday if it's after the kill zone. And when sort of afternoon comes for Friday, you generally want to be out of a trade unless you are swinging the trade and it is in a decent amount of profit, or at least not too far from your entry point. And also you must make sure that your stop loss is in place so that if the market gaps over the weekend, you are protected in some aspect. Now, this you'll have to go and watch this video again, but I explain in great detail here that from Monday's kill zone to Wednesday's New York kill zone. So it's Monday's London kill zone to Wednesday's New York kill zone is when the high of the week or the low of the week will be set. Okay, and to help you determine that, you will need to have marked up your chart. So if you look at EU here, I'm going to mark up this order block over here, which is a daily bullish order block. Okay, so this is a daily bullish order block over here. Now forget the 4-hour for a second. Let's just focus on the daily chart, and now I will go back to my 1-hour chart and see price intersecting at that order block. So we have that daily order block, which was a previous daily order block, and we can see that price came into this blue box over here and basically tested a little bit more than the 50% of this daily order block and then took price higher. So here on Wednesday is our low of the week. Okay, so this is what I needed to get across this evening, and now I will show you how these kinds of trades can be taken. So based on what I just said about this daily order block, if you focused your attention this week on the daily order block for EU and you drop down to a lower time frame, you would have also noticed that this black candle is bearish and all of these sellers were bought to. So they buy into down candles. So that makes this black candle here a bullish order block for the 4-hour. Okay, so if I pull that across, we now have a bullish 4-hour order block inside of our daily order block. Okay, so now we have two confirmations based on the fact we are looking to buy and based on the fact that we know we are looking for, because it's a daily bullish order flow, we are looking for a buy opportunity, even though you might have seen that the 4-hour order flow is bearish. Now, obviously, the daily order flow takes precedence over the lower time frames. So here we have a 4-hour bullish order block, daily bullish order block over here. And now I will go to a lower time frame of 1 hour over here and work within a range that price had traded in. Okay, so if we also mark up liquidity, so here we have liquidity of that low over there. here we have liquidity, which makes two lows in equal lows. So those two are equal lows. There is a lot of liquidity, sell side liquidities for breakout traders or buy stop losses sitting below these points, because these rallies was an accumulation of a large amount of pips. So there is liquidity sitting below here. So we have a 4-hour order block, we have a daily order block, we have liquidity sitting over here, and also if we pull our fibs from this level to that level, you will see that although price exceeds the 79%, it is still trading in this range. It is ranging inside of our sweet spot, our 62%, our 70.5%, and our 79% retracement levels. Now, sure, price is closing outside of these sweet spot zones, but generally speaking, price is accumulating inside of the zone. So what happens here? They accumulate price in this zone over here, inside of this daily bullish order block, inside of this 4-hour bullish order block sitting over here. So once they raid these equal lows over here, they will most likely run the liquidity. And what I just said about the low of the week being formed, we notice that this was the low of the week for EU over here. So they ran out that liquidity. So this would have been Friday, Thursday, Wednesday. So this was Wednesday over here. And if we also notice that what I said, that before the kill zone on New York, which is for me 3 o'clock in the afternoon, the low of the week had formed before the before the New York open over here. And then price continued its trend based on the order flow of the daily chart, bouncing off the daily bullish order block, bouncing off the 4-hour order block. And there's multiple reasons why you could have taken this trade over here. Now, if you go down and zoom in here on the Wednesday, you will also see that if we add 10 a.m. for me, which is about here, this was formed around the London kill zone low. So the low of the week was formed around the kill zone of the London session of the day. So that was also low of the day as well as low of the week. And then price continued its trend. And it continued and targeted, as many pointed out in the chat, that there was a fair value gap or liquidity void sitting on EU over here for the 1-hour and the 4-hour chart. Okay, so that was actually a particular trade I was in this week for EU, where it ran liquidity, and I entered off the 15-minute chart. Now, if we just zoom out here for a second, I had placed a trade based on 10 pips over here, which was about, once that liquidity had been raided, I had entered the trade, and I had caught it on this candle over here. So I had a 10 pip stop loss for this specific trade over here, and I caught some of this move to the upside over here, which was a decent trade. Now, others have asked me, please show me some of the trades you had taken, so I will do that. And if we look on USD CAD over here, so the same applies. So if we look at USD CAD on the 4-hour chart, this area over here, you will see that there's two bullish candles next to each other. Now, that is not normal price action because there needs to be an equal high or an equal close of where the candles close. Now, we know with green candles or bullish candles, the candle needs to close at the top and the next candle needs to open next to it over there like that. Now, that didn't happen. So this entire range over here is a imbalance of price. So that is an imbalance of price, okay? So that is what I had targeted once price had opened on Monday. So this was the opening candle for the 4-hour over here, somewhere around there, whereas the opening candle for the weekly candle open. So that was Monday's open, okay? So this was a target I had predicted that this gap would close and there would be some sort of reaction over here. Now also, if I look at a higher time frame to give me confluence for my trade, I will add 2 order blocks here, which are daily order blocks. So this is a daily order block over there, as well as this was also a daily order block. Now, obviously, price has already poked through these order blocks, but they were still valid once they were respected. They've been violated now, but obviously, I had traded the price action from Monday. So I have marked up this daily order block over here, as well as this daily order block over here. Now I will go down to my 4-hour chart, sorry, my 1-hour chart to add myself a Fibonacci level. Now, I personally like to use a 1-hour to pull my fibs if I have done a top-down perspective of the market. So daily, 4-hour, 1-hour. Now, on the 1-hour, I would like to add my fibs. So here, these lows to these highs, also, if we notice, gives me OTE 62%, 79%, as well as the gap or imbalance of price that I had identified over here on these 2 candles over here. Now I will add myself my institutional price levels around where I want to look for an entry. So I have an 800 as well as my round number over here, which is 33, as well as the 500 IPL, which is my 3 nearest IPL levels. Now, I don't add IPL levels to my whole chart. I only add them where I need to add them. That was also another question that someone had asked me. How do I know, or why do I add IPLs where I add them? Well, I'm looking for an entry at a certain price level, so I will add IPLs to that price level area of where I want to enter the trade. So I have added 3 IPLs. I have my imbalance. I have my 2 daily order blocks over here. And if I also see and zoom in here, there is a 4-hour order block, a bullish 4-hour order block sitting over here. So this black candle or bearish candle was traded through, and that is now giving me additional confluence to take my trade in the area I'm looking where there is a price imbalance. So now I have a daily order block. I have, sorry, 2 daily order blocks. I have a 4-hour daily order block. That's 3 confirmations. Now I have an IPL. I also have my fibs. So just for this specific trade, I have 5 confirmations to take the trade for a buy over here. And I think if I look, I got in at 850. So my trade was for 850. So 32,850 was where I had set my buy limit. So over here would have been my entry, so 850, and I think I had a 25 pip stop loss, so somewhere around over there just before the end of the daily order block. So 25 pip stop loss, and the trade went about 60 pips or so up. I think I closed at about 49 or so. But there you can see that that was a trade that I took. I had 5 confirmations and it was a decent trade. Now, sure, if you had followed the order flow, it could have potentially been against the trend. But to me, I've been trading very long, so some of you may feel nervous about counter trend trading. But if the setup comes to you, I like to take the trade. So I would generally recommend that you all stick to the order flow until you feel more confident with all of the concepts we teach here. But generally speaking, there isn't a harm in trading any setup that gives you multiple confirmations to take the trade. Okay, so that brings me to the end of what I needed to show you based on the weekly open. So you'd have to go and rewatch the Zoom at the start to see how I explained that weekly open candle and how the 5 days of the week can be narrowed down into 3 days from the London open on Monday to the Wednesday open of the New York kill zone. And in that time range, we can look for ourselves an entry either to participate in the trend of the market, the daily order flow or the 4-hour order flow. Okay, so now I will take some questions. Does anyone have a question?
Hi, Darren. Sean.
Hi, Sham. Go ahead.
Darren, I have a question on gold.
Yeah, sure.
Gold has not given a specific direction. It's still on a bearish trend, but the 4 hour is also a bearish order block that it has made before closing. On a 1 hour, it's a bullish thing. So you mean that the price would go much down because on a daily, on a weekly order block, it's still on daily order block, it's bearish.
Okay, so I think it was Saturday last week where I said that this order block over here, this 4-hour order block, it had pierced through that order block. So if we look here, this was the 7th, I think. So the 7th of August was a Friday. So this order block had been violated because this candle had closed below that 4-hour order block. So I did say that gold, you can look for selling opportunities based on the order flow of the 4-hour had changed. So there could have been a selling opportunity, and that selling opportunity could have come in the form of, if we pull our fibs bearish from the low to the high of that range, there could have been a 62% retracement. If you go down to the 1-hour chart, you may have gotten yourselves a better entry, or even on a 15-minute chart. So there we just missed 62%. If we go down to the 15-minute chart and we just zoom out in that range for last week, let's see if we had gotten ourselves an entry here. So we would have gotten 62% retracement entry over here. So if we had missed that specific entry, so if we look at that same area of price for that 4-hour order block that was traded through, this would have been another 4-hour order block over there, which would have been the next order block created. So now there's 2. We have obviously our breaker over here, and we have this 4-hour order block over there. So if we go down to a lower time frame, there could have been retracements where we could have entered for a sell. Now, as price is moving now, if you say that when we look at a higher time frame, that some of these gaps, I think you mentioned the weekly. So the weekly, basically 50% of that candle has been rejected over here. So you can see that this imbalance of price, 50% of this imbalance have been closed over here. Okay, so technically on the weekly chart, we are obviously still bearish because there's no order block on the weekly chart that has been traded through. So we don't have a breaker on the weekly chart. So the weekly chart is still bullish. And on the daily chart, obviously, we have a different scenario over here where this is a daily breaker over here. And we can see now price is trading into this breaker over here. Now, when the market opens on Monday, it is very difficult for gold to potentially close this entire gap. But let's say hypothetically it did. I would expect a strong reaction that if this gap on the daily chart were to be closed, or this daily liquidity void over here gets closed, and price decides to travel up and close that void of price, well, then to me there's evidence on here that we could expect a further move to the downside on gold. Now, if that scenario does not play out and they respect this breaker over here and price decides to not go higher and close some of that gap, well, then we could just reject off of this breaker that we currently have over here. So that is something to watch out for on gold. Now, when you go down to a 1 hour time frame on gold and you add those days, there may even be accumulation building up for Monday next week. So accumulation can come in the form of price just trading sideways for a couple of days, taking out some liquidity of the previous days lows, the previous days highs, and then continuing its movement to take out either that gap I had said, the liquidity void, and traveling further lower, or respecting this breaker that currently exists and then going back to our weekly level of this 50% of this liquidity void to close the remainder of this liquidity void over here of that weekly candle. Does that help you, Sean?
Yes, thank you, Darren.
Okay. Anyone else got any questions? I can only take 1 or 2 more questions, so you better speak up now.
Okay, Darren, I've got a question.
Benson, just speak up. Your mic's very soft.
Okay, can you hear me very well?
Yes, go ahead.
Okay, please, can we go to USD card?
Yeah, sure. What do you want to look at? Which time frame?
I mean,
sorry, I don't hear you.
can we get the USD card?
Yeah, we're looking at it. Which time frame?
Okay, just 1 hour time frame. Oh, ideally, I just want to ask if someone were to take this buy move on Friday. I mean, what could have been the criteria for taking this buy move from the low to where it is at the moment?
Okay, so I actually was monitoring myself over here. So the criteria could have been, if we had seen on the daily chart for USD CAD, this was a liquidity point sitting over there. This liquidity sitting below these lows were raided. If you see over here, this liquidity was raided over here on Friday. And then price started to rally once that liquidity had been raided over there, as well as obviously this. If we look at the weekly chart, this is a weekly order block over here. So this bearish candle was traded through over here. This one over here, this weekly candle over here was traded through, and that is a weekly order block. So price will test this weekly order block, and as you can see, it raided the lows of that candle, which is obviously liquidity sitting below there, either for sell stops or potential people who bought, and there's stop losses for the buyers sitting over there. So both sides of the market have liquidity, and if you look, that liquidity was raided with this wick or this turtle soup over here, and then price decided to rally again over here. So if you look at that rally, you will notice this, that price made a low of this candle. It then made a high of this range over here, and if you pull your fibs, boom, OTE over here. And I know this because I was personally looking at that trade, but because it was Friday, I didn't take the trade. Now, I'm not upset that I didn't take the trade, but I just don't trade on Fridays in the afternoon. So that is the criteria that happened or unfolded on USD CAD for Friday. It took out that candle's lows on the daily. If you saw, there was a bunch of accumulation sitting over here. Obviously, liquidity raids the liquidity and then makes a run on liquidity. Okay, so that weekly order block was tested and it bounced, and you can see price now sitting inside of this green box, which is the weekly order block that I just marked up. So you can expect reaction to unfold based on what is happening here. And if you go down to the daily chart, you will also see the fact that this is now also a daily order block sitting over here. So we could expect some buys on USD CAD to continue over here. And if you go down to a 4-hour chart, you will notice more areas where you can potentially look for price to retrace to. So here would be another area of this 4-hour order block for price to retrace into over here. Now, also, if you add a fibs to that level of where price is traded to on Friday, you will also see that we could expect retracement into our sweet spot before taking price higher to at least target 1 or target 2 here on my fibs. Now, this session is going to end, and unfortunately I cannot make another session because of the restrictions of time that I have this evening. But these, I'm sure you have learned something from this Zoom session, especially about the weekly open of the Monday and the Wednesday. So thank you everyone for joining.
Thank you so much. Thank you so much.
And I hope you have all learned something.
Thanks a lot, Dan.